Good evening, everyone. Delta Airlines and Northwest Airlines late today joined the growing number of carriers throwing in the financial towel. Both airlines have filed for Chapter 11 bankruptcy protection after years of steep financial losses. Delta and Northwest are now the third and fourth major carriers to declare bankruptcy, along with United and U.S. Airways. That means almost half of the airline capacity in the U.S. is now flying under Chapter 11. As Stephanie Dew reports, analysts say there could be other airlines heading down that path.
Soaring jet fuel prices and loss of revenue from Katrina swamped hopes of an industry turnaround this summer. Despite more people flying and slightly higher fares, the outlook hasn't improved.
We're even at a reasonably robust pricing environment right now. The major airlines will lose billions of dollars this year, and there is no end in sight to their losing money.
Bankruptcies could actually help airlines lose less money by reducing capacity.
One of the expected results of a Delta and/or Northwest bankruptcy filing would be that each of those airlines would further reduce their flying capacity, particularly in the domestic market. And that'll be good news for the other carriers. Pricing has been improving since February under the pressure of high fuel costs. And if there's some more capacity withdrawn from the system, that would actually allow that to continue.
Bankruptcies at large legacy carriers also trickle down and squeeze smaller regional airline partners.
We've never in the history of the airline industry seen almost half of the industry in bankruptcy protection. But the carriers continue to work to ensure that we can operate and provide service to small communities.
Delta and Northwest have lobbied Congress to change the pension law to give the airlines more time to fund their pension obligations. That legislation is now making progress in the Senate. The industry is also pushing Congress for an immediate one-year holiday from the 4.3 cent a gallon tax on jet fuel.
The airlines are integral to the overall successful economy of the United States, and fuel is the one factor that's keeping us from being profitable. We've got to do something about the high price of oil.
But many lawmakers are cool to the idea of giving the airlines tax breaks. And even by the industry's own estimate, the fuel tax break would add up to just $600 million a year, a small part of a $30 billion fuel bill. Stephanie Dew, Nightly Business Report, Washington.
Joining us now to talk more about Delta and Northwest, Ray Neidl, airline analyst with Callion Securities. Hi, Ray.
How you doing?
So will Delta and Northwest survive?
I think they'll survive. Their franchise are strong. The management team, I think, in place now is capable of bringing them through this period. They just have to get their cost structure down and clean up their balance sheets, especially in the case of Delta with the balance sheet.
You heard our report. 4 of America's major airlines are in bankruptcy, and that means almost half of all U.S. capacity is flying under Chapter 11. What are the implications of that?
It has no implications. The consumer will not see us changing schedules. The frequent flyer programs will stay in place, and the airlines will do their thing in bankruptcy to try and make themselves more efficient. But from a consumer's viewpoint, they really won't see any changes.
What does this mean for other airlines? Is it just a matter of time that we're going to see Continental and American, which right now are considered the stronger airlines, it's just a matter of time that we'll see them going into bankruptcy as well?
Well, American does have a substantial cash reserve, and they've got enough time to make the reforms and cost cutting that they need outside of bankruptcy. Continental is in a little bit shakier position, especially with high fuel costs, but overall, this is going to speed up the process of reform and put more pressure on the other carriers to reform their models and reduce their cost structures.
Let's talk about each one of these, Delta and Northwest. First, Northwest. What happens, for example, with the mechanics strike, and what happens to those mechanics?
Probably nothing is changing. Northwest, from what I understand, is in the process of replacing these people with permanent replacements. And in bankruptcy, they would have basically done the same thing, outsourced most of their jobs, which they did after the strike.
And Delta, you say you think it'll survive. When it comes out of bankruptcy, what's it going to look like?
I think it's going to be a little bit smaller. It's going to be a little bit more oriented towards international. I wouldn't be surprised if Song became a bigger part of their domestic operations. And ultimately, down the road, I think there's going to be consolidation and mergers with the consent of the Justice Department.
So who merges with who? Who's left?
Well, I think probably we end up with 2 or 3 major legacy carriers. American and United are certainly candidates to be survivors. And the third one, if there's a third one, may be a combination of Continental, Northwest, and Delta.
Mm-hmm. You said that it's kind of business as usual, even though these airlines are in bankruptcy court. But what airlines benefit from this latest development of Delta and Northwest going into Chapter 11?
Well, people were thinking that some of the low-cost carriers that compete with Delta would benefit, such as AirTran and JetBlue. The only warning I would give on that is if Delta comes out a leaner and meaner fighting machine, the low-cost carrier is going to face heavier competition.
Let's talk a little bit about stocks. Let's say you own shares of Delta and Northwest, and they are really down to just, very small amounts. What do you do? And also in terms of the other airlines, do you recommend putting any new money in the other airlines?
Well, bankrupt airlines, historically, the stocks eventually become worthless, even though they do trade during bankruptcy, so you should keep that in mind. Other carriers, people may perceive that the bankruptcies will be beneficial to them on a selected basis, and we may actually have a small rally in some of the other airline stocks. Of course, a lot depends upon what happens with the price of oil tomorrow. Today, the price of oil was up, and most of the airlines, as a result, were down.
Okay, Ray. Thank you so much. It was very informative. We've been speaking with Ray Neidl, airline analyst with Callion Securities.
Retail sales in August suffered their biggest decline in nearly 4 years. The Commerce Department says sales fell more than 2% last month. The drop was driven by a huge skid in auto sales as the momentum from those employee discount programs ran out of gas. Excluding autos, retail sales actually rose a stronger than expected 1%. Economists believe that was fueled by high prices at the pump.
You also have to look even a little further inside the report and look at what's happened to gasoline prices. And if you take out the impact of gasoline prices on the report, you come up with an ex-auto, ex-gasoline number of about 0.5%, which isn't bad. I mean, that's a healthy number.
Well, blue chip stocks looked a little healthier early today as bargain hunters stepped in after yesterday's sell-off. But the drop in retail sales made buyers very cautious. At noon, the Dow was up only 13 points. NASDAQ actually down 3 points. Investor disappointment over the market's tepid rebound and a 3% surge in oil prices led to a broad afternoon decline. The Dow Industrial Average closed down 52.5 points at 10,544.90. NASDAQ Composite ended off 22.42 at 2149.33. Standard & Poor's 500 lost just over 4 points to 1,227.16. In the bond market, the 10-year note fell 9/32 to par and 22/32, boosting the yield to 4.17%.
Global insurer Lloyd's of London estimated today its net losses to Hurricane Katrina will run about $2.5 billion. That would make Katrina the second biggest single event loss in Lloyd's history. That's after the September 11th attacks. Damage estimates made right after the storm hit were all across the board, but analysts now say Katrina should be the global insurance industry's costliest ever disaster. It'll also be the costliest natural disaster ever for American taxpayers. To better understand the size of that challenge, Washington Bureau Chief Darren Gersh talked with Senate Budget Chairman Judd Gregg today, and Darren began by asking the senator about Katrina's impact on the federal budget.
Well, it's going to be significant. In the short term, it's going to mean that the deficit goes up probably 150 to maybe even more $1 billion. In the long term, it may have an impact in that this is a very prosperous part of our country, which generates a lot of revenue to the federal government, and that'll have an impact. And then there'll be a long-term build-out issue, which I imagine will last for 5, maybe 10 years to reconstruct the area that we will continue to pay for. I don't know how much that'll be. But clearly, in the short term, it's going to spike the deficit considerably.
There's been speculation that this catastrophe is going to refocus the thrust of government, and there will be more of an activist government, more active government, and that the agenda will change. We'll see Social Security tax cuts and other reforms pushed off the table by Katrina. Do you think that's likely to happen?
Well, I think it's clear that some things that we were going to do this fall aren't going to be done, or that we hope to do this fall. Social Security would be one. Immigration reform would be another. Some health care reform, which I'd hoped we were going to get to the floor and discuss, might be another. So yes, the practical effect of the hurricane is that the calendar has been overwhelmed by the need to address this region of the country, which has been so devastated, and the people who need help down there need federal assistance.
But you don't see this changing the orientation maybe up here towards more of an active government that might last for a number of years, as some people are speculating?
Well, not in the sense that there'll be a systematic change. No, I do think, and I do believe very strongly, that we need an on-the-ground entity in the Gulf Coast where there's a strong individual who has the authority to manage all the federal resources and coordinate those resources with the state and local government, much like Herbert Hoover did after the 1927 floods. There has to be a parallel effort in the area of audit and management so that you're sure the tax dollars are being used effectively and not being wasted.
Well, let me follow up on what you said about auditing and making sure the money is spent wisely. You were a governor, and now you're a senator, and you know how these big events can be used by some people to insert their spending into the government, saying it's related to Katrina, everything from dredging your port to helping farmers to helping the environment. Worthy causes perhaps, but not necessarily disaster related. How are you going to keep this out of the budget and make sure that the stuff that's really needed gets in there?
Well, I've been pressing the administration very hard, and I've been pressing the Senate leadership very hard to make sure that we have a set of priorities. That as we move these programs quickly through the Senate or through the Congress, that those programs have at least met a threshold test of priorities. And one of the priorities has to be that it is Katrina specific, and that it's not to reimburse the farmers in the Midwest who happen to have their fertilizer price go up as a result of the Katrina event. One of the standards should be that everything is sunsetted, by the way. All programs that we put in place relative to Katrina should have a specific sunset date of maybe a year, maybe 2 years down the road, so that we actually have to look at them again in order to keep them going. But it is a real concern for me that we're going to end up spending a lot of money on a lot of things that aren't necessarily appropriate to this relief effort.
Well, let's talk about using the rebuilding as an effort to showcase conservative ideas, tax cuts, maybe vouchers, maybe other programs. Is that appropriate in this case? Would you like to see the Republican leadership do something like that?
Well, what's appropriate is to come up with ideas that are going to help these people as quickly as possible and actually use our tax dollars most effectively. And there have been some ideas put forward which might work. Whether they're conservative or liberal is really not the issue. It's whether the programs will work.
All right, Senator Gregg, Budget Committee Chairman, thank you very much.
Thank you.
Shares of Chinese internet search engine Baidu.com headed south today after two big investment banks said the company's stock price was overblown. Goldman Sachs and Piper Jaffray are both rating the stock an underperform, saying it's far exceeded even the most aggressive evaluations at its initial public offering. Both firms, by the way, were underwriters of Baidu's IPO on August 5th. Since then, the stock has traded as high as $154, but Paul, it's nowhere near that right now, especially after investors bailed out today.
Well, as you might expect, Susie, Baidu.com shares were among the most active in the NASDAQ market, and we'll see them in a moment as we take a look at our stocks in the news tonight. Most active big board issue on 18.1 million shares. Motorola moving up 42 cents, then Lucent a 4-cent gain. Micron Technology did well, up 55 cents, but Time Warner down 6 cents. Fifth in volume, Walmart stores in the weak retail sector down 37 cents. General Electric dropped 23 cents, although the company said it is on track to meet third quarter and full year earnings despite the impact of Katrina on its insurance business. And incidentally, GE plans to cut its stake in Genworth Financial, its insurance unit, going to cut that stake from 52 down to 32%. EMC down 29 cents. Citigroup 12-cent loss there. Nokia down 3 cents after a couple of good days on the upside. Corning was down 93 cents. Morgan Stanley analysts predicted that LCD prices, that's liquid crystal display prices, will be down about 5% overall this year. Meanwhile, an Argus analyst said this is just simple profit taking. The stocks had a sharp run up recently. Lehman Brothers Holdings up just 13 cents at the closing bell, but it traded as high as $114.95 today after reporting third quarter earnings jumped 74% over last year to $2.94, up from $1.71. The street estimate only $2.37, and the company cited very strong investment banking business. Linens and things up $2.31. The Financial Times of London reported the company hired CS First Boston to advise it on strategic alternatives, including the possible sale of the company. Standard & Poor's, meanwhile, upgraded the stock from sell to a hold. Paul Corporation down $1.76. Fourth quarter earnings lower, 34 cents versus 44 a year ago. Sees 2006 earnings at $1.31 to 146, and even that's below the street estimate of $1.51 a share. CEC Entertainment down $3.20. The company said same-store sales in the first 10 weeks of the third quarter are down 5% from last year. BB&T Capital Brokerage downgraded the stock from buy to just a hold. Then Allied Waste Industries off 78 cents or 8.5%. J.P. Morgan downgraded it from neutral to underperform. Kroger moved up 54 cents. Morgan Stanley upgraded it from underweight to equal weight in the belief the company is growing its sales without hurting its profit margins. Newmont Mining, the granddaddy of all the golds, up 220. New York December gold, as you see, up $3.70 to 453.70 an ounce. Quite a move in recent weeks. Brady Corporation, which is a maker of labels and other identification products, reported fourth quarter earnings 32 cents, a penny below last year and a penny below the street estimate. Says 2006 earnings will be below the consensus as well, but it did boost its quarterly dividend from 11 to 13 cents and said it's going to buy back up to 800,000 of its own shares. Google topped the active list, down $8.68. Intel 41-cent loss. Microsoft down 17 cents. And there you see Baidu.com plunging $32.27. Remember, that stock came public at 27 in early August. Cisco, 41-cent drop there. That was fifth in dollar volume. Apple Computer fell $1.21, little profit taking. eBay down 62 cents, and Oracle a 20-cent loss. SanDisk was up 61 cents, and Celgene down up $1.86. An FDA advisory panel said Celgene's Revlimid product is effective in treating some anemia patients, and it should be approved. Finally, Image Entertainment up $1.42. Companies evaluating an unsolicited takeover bid from Lionsgate Entertainment. It's worth about $4 a share in Lionsgate stock. Those are the stocks in the news tonight. Susie?
Paul, America's biggest labor federation is getting smaller. Unite Here, a union with 450,000 apparel and hospitality workers, said today it's leaving the AFL-CIO. Instead, Unite Here will join a new dissident labor group called the Change to Win Coalition. That group's membership includes the Teamsters and other unions that have also recently left the AFL-CIO. 50 years ago, when organized labor was at its height, 33% of all private sector workers belonged to a union. That number has now dropped below 8% today.
Tomorrow, no waiting, no problems. Just go through and go on your way at Orlando's International Airport.
Here's a look at what's happening tomorrow. On the economic calendar, August consumer prices come out. Also tomorrow, earnings from Pier 1 Imports, Bear Stearns, and Adobe Systems. In the Money File tonight, some advice if you're in the market for a mortgage for a new house. Be sure to consider a worst-case scenario as well as a best-case one. Here's Eric Schoenberg, executive editor of Money Magazine.
A few years ago, almost nobody needed a fancy mortgage to buy a house. Now, weird loans are everywhere. Interest only, option payment, no doc. Overall, these non-traditional mortgages account for maybe a quarter of all new home loans written. In expensive markets like San Francisco and Washington, D.C., they make up more than half. If you wonder how the housing boom is going to end, this is what to watch. Now, some of these newfangled mortgages are riskier than others, but all share one goal. They make it possible to buy more house than you can afford. Most of them make sense only if real estate prices keep going up, and if they don't, these mortgages could convert a housing downturn into a cascade. Say you have an interest-only adjustable mortgage. If rates go up at the same time your interest-only period ends, your monthly payments could easily rise 50%. If you don't have enough equity, you won't be able to refinance. And if you can't refinance and you can't afford the payments, you probably have to sell. And you won't be too picky about the price. Multiply that by thousands of overstretched homeowners and, well, it's not a bull market anymore. If you're in the market for a home, talk to lenders before you shop and find out how large a traditional mortgage you qualify for. You don't want to fall in love with a pricey house and then try to fit your mortgage to that. Buying a home with a high-risk mortgage is simply speculating on the real estate boom. Every bubble eventually pops. And if this one goes while you're carrying an interest-only option payment, no money down mortgage, it's going to hurt. I'm Eric Schoenberg.
Recapping today's market action, a sharp rise in oil prices sends stocks lower. The Dow falls 52 points and the Nasdaq Composite loses 22 points. To learn more about the stories in tonight's broadcast, go to nbr.com.
And finally tonight, this has to be an example of reality programming running amok. Croatia has launched a new reality show on the internet, but instead of people being voted off, you vote off sheep. Each sheep in the 7-member herd is profiled individually on the web, and you can watch how the sheep feed and interact with each other around the clock. The last sheep standing, when the show ends on Saturday, will receive poetry written in his honor instead of the usual cash award. The show has drawn the ire of animal rights groups, but Paul, its organizer, says the whole idea of the show is that people who take part in reality programs are made to look like, guess what, sheep.
You know, Susie, that's not a bad observation.
I'm a little sheepish to respond. Yeah. That's Nightly Business Report for Wednesday, September 14th. I'm Susie Garb. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
Don't let your nest egg get away from you. Objective financial advice can help. A.G. Edwards, for 118 years, fully invested in our clients.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more information about investing, you may order the NPR Video Library of Personal Finance by calling 1-800-535-5864. This program is available in either the VHS or DVD format.
We are PBS.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following.
Union Bank of California, providing personal and business banking services, trust, and investment management to the Pacific Northwest since 1882.
Broadway's Lost Treasures 3, the best of the Tony Awards, brings you the biggest stars in the history of the American musical theater, performing the song and dance numbers that made legends on the Great White Way. This rare archive contains 19 show-stopping performances. The musical magic of Broadway, available exclusively on PBS.